And Nigerian banks are soon to recapitalize in order to rank among the top 500 in the world.
The Central Bank of Nigeria unveiled this in its 5-year roadmap. The bank also expects to implement a 500 billion naira facility to grow non-oil export.
And also included is a commitment to attain double-digit economic growth, a cut down in inflation to single digits, and maintaining a managed float exchange rate or exchange rate regime so that the impact of volatility can be minimized. A trade monitoring system is also to be launched in October. It is an automated system that would reduce processing of trade export documents from 1 week to a day. We'll have more on that in the business as we get along. But we have in the studio now Mukhtar Mohammed, CEO of Finance with Mukhtar, and he's here to make us make some sense out of this so we can have a better understanding of all of this. Now, it's good to have you join us.
Thank you. Good morning.
The CBN coming up with this 5-year plan or 5-year development plan, if you have to put it that way, made a lot of Nigerians see as, okay, it's a good outlook. This is what they've been looking forward to say, okay, some Nigerians can now hold government to something, you know, based on timelines and all of that. But let's come to the real issues. Single-digit inflation rate to be reduced, and then double-digit growth. What are the activities that will, you know, enhance this vision?
I think the first activity to enhance this is get infrastructure in place. Okay. And as you and I know that is a Hercules tax, and it's unfortunately it's not in the hand of CBN to do that.
So are you saying that the deficit on the infrastructure might make that aspect not to be achieved?
Yes, like what he was saying, the CBN governor was talking about making export papers within 24 hours.
From 1 week to a day, reducing from one week to a day.
Yeah. So it will involve a lot of technology, a lot of infrastructure to be put in place to be able to achieve that. Now the CBN government is talking about single growth, and I mean the single inflation rate. That also has to do with a lot of, we have to get our manufacturing working. We don't have to be exporting. We don't have to depend on the volatility of the exchange rate to begin to make sure we get that single growth. Then thirdly, again, he was talking about we have a single double growth, and in the next 5 years, is very close, because when you know that we are even doing just about 2.1 as it stands now, getting to double growth, that we're talking about 10 to 12%, and we have never done that even when we have the oil boom era. Wow. We didn't get to that. We got to 7.6.
So we don't have Nigeria doesn't have what it takes right now to achieve a double-digit growth.
We don't have what it takes right now, and he's giving a 5-year plan. Let's see what happens in the next 2 years. Maybe we could see that, and I think he has set the ball rolling, because all these plans are tied to one thing: the stability of the financial sector, and that is why I think he's thinking about the recapitalization of the bank, which is going to be one of those things, the key derivatives that would drive all his policy. Because if the bank cannot recapitalize, then
But the recapitalization of the banks doesn't translate to the banks investing in some of the infrastructure that you talked about. So how is that going to benefit in the long run?
No, when you have good recapitalization, like he was saying, remember that at the point where we had the 25 billion, banks were involved in a lot of small, medium-scale enterprise, giving money to entrepreneurs, and that also was responsible for the collapse of some of these banks, and recession tripping in, and we had the stock market crash at 2008. And that was also because the regulators were not on top of their game. The regulatory framework was not on top of their game. Now, we're talking about a bank, as far as we're concerned, at the time the bank was doing about 25 billion, that was like about $100 million at that time. And presently now, if you look at the exchanges at 360, that means the bank recapitalization has gone down to about $75 billion.
Exactly.
So if you want to finance all these things, you need to have good liquidity in the system. Right. You need to have banks that are able to give loan for the long time, because you're talking about mortgage financing and consumer financing. It's not a financing that you can just do in short term. It has to be a mortgage financing. We should be talking, presently the Federal Mortgage Bank is just doing 10 years, 15 years. But when we want to do true mortgage financing, we're looking at 30 years, we're looking at 35 years, depending on the age limit of the person. So if banks are not recapitalized, then you cannot achieve all this.
Okay, all right. So much on the table of the central bank, but they're all achievable, and we wish wish him well and wish Nigeria well as well.
I think
they're also talking about the 100 million bankable population, also within the time frame.
That was great. If you look at that's talking about financial inclusion,
yes.
And we are beginning to see that in some banks having
all right.
agents.
Sorry, we have to leave you here now.
Thank you.
So much to talk about. Thank you very much, Mukhtar Mohammed, for coming on the program.
Always a pleasure.
Thank you. Yeah. Right. Nigerian banks are soon to recapitalize in order to rank among the top 500 banks in the world.
The Central Bank of Nigeria unveiled its 5-year roadmap. Now, the bank also expects to implement a 500 billion naira facility to grow non-oil export.
Also included in a commitment to attain double-digit economic growth, a cut down in inflation to single digits and maintaining a managed float exchange rate regime so that the impact of volatility can be minimized.
A trade monitoring system is also to be launched in October. It is an automated system that will reduce processing of trade export documents from 1 week to a day. Mukhtar Mohammed, CEO Finance with Mukhtar, joins us now to talk about this. Thank you for joining us on TVC Breakfast.
Thank you.
Well, the road to bringing or building a stronger economy is far from complete, or is far from complete. That's what the CBN governor has said. But then when you look at some of, when you break down some of the things he talked about, he's talking about having a double-digit growth and bringing down inflation to 1 digit. What would this framework that he has given ensure that that is achieved from what you have said?
Well, he's tying all that to the recapitalization of the banking sector.
Yes.
I think that's exactly what he wants to do. And I think the first thing he will do is to recapitalize the bank. Then we begin to see all these things play out. And when you talk about inflation, inflation is a monster that cannot be tackled by monetary policies alone. We have to bring in the physical policies also in terms of goods, services, then the monetary policy in terms of credits. So I don't think when it comes to, when you look at inflation, he could say he could get it to the single digit if he was able to do it. I remember when he came to power, inflation was about 18%, and he has brought it to about 11 or something percent. So if you say he has a 5 years tenure to bring it to single digit, that would be good. I think that looks achievable, because what he does in tackling inflation, his own part, is that he makes sure that the exchange regime is stable, and he has been able to manage that from the height of about 500 to a low of 360 to sometimes 359. So he has been able to do that. But when you talk of growth, even when in our boom era, I don't think we achieved double-digit growth. So it's a Herculean task. For now, where I'm sitting, I don't see it.
Well, putting up a positive attitude, let's say we are envisaging that something will happen. But then another aspect is the aspect of maintaining a positive interest regime. Now, another question in the minds of many Nigerians is, when you look at the percentage for interest rate right now, is it positive at all? And access, how is it going to happen, really?
It's not positive, and even the CBN also are not helping matters, because it's a traditional rule for the banking sector to give credit, loan, interest rate. And the CBN also is playing their own role in terms of liquidity ratio that the bank has to keep with them also. That is one way. And now sometimes you can see that the TBM is trying to do the traditional banking way by telling farmers they could access loan from them directly at a single-digit inflation rate. So with that, no, inflation rate will generally come down. It's all based on demand and supply. If these banks are very liquid, if these banks are capitalized, then there will be a lot of liquidity. They themselves will be looking for who to give this liquidity to. Now, the major challenge with the banking sector is that they don't want to do high-risk ticketing liquidity, because of the low capital base, and in terms when it's rooted, learning from their experience of 2008.
So what challenges do you think there might be for the CBN with all of this?
I think the most main challenge is how the CBN will be able to tell the money deposit bank on how to run about it, what support they're going to give to them, especially in the cash reserve ratio. Is it going to come down so that those banks can be able to invest most of those cash than just keeping those cash with the CBN?
All right, Mukhtar Mohammed, thank you for your time on TVC Breakfast.